he's doing. All right, let's slow you down a tad and hit it. Nope, up here.
All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents or independent contractors are in such capacities licensed financial advisors, registered investment advisors or registered broker-dealers. Nothing contained in this webinar, website or promotional material constitutes a promotion, recommendation, solicitation or offer of any particular investment, security or transaction. Trading options involves risk.
Yes.
Visit the OCC website www.optionsclearing.com to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not the service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
Okay, well, breaking news. I have to look into something that I consider shocking. Satisfaction. I just saw on CNBC that airline satisfaction is at an all-time high. This is J.D. Power. It seems to say that. News. Let's say news. Okay, here it is. Oh, I did see this morning about Alaska Air, because we keep talking about how Alaska Air actually sucks. But they bought Virgin, which had the best satisfaction, and that's suddenly turned Alaska Air satisfying, apparently. What is this? Why is this dark? Ugh. All right, well, I'll tell you if you can't see it. Airline into investments, blah, 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 blah. Okay. Passenger satisfaction improves to 762, a record high. Is anybody satisfied with the airlines? Not first class people. Regular people. Is anybody actually satisfied? Just let me know if any one person here is satisfied with the airlines who flies in coach. First class is fine. But I only get, I'm cheap. I only get first class when they upgrade me, or if it's a cheap upgrade. Like sometimes I'll bump myself if it's not too much money. But you know, I fly to Florida a lot, and I can't justify spending $200 for $100 basically. I can't justify spending $100 an hour to sit in a more comfortable seat. That's just stupid. 4 hours when I'm going to Vegas or something like that, I'll spend a little bit of money to get in the first class because that's just annoying. And then I'm in a bad mood when I get off the plane, which is no fun. But short trips, no way would I upgrade. And I certainly would never pay those full price fares for first class. But anyway, I can't imagine how a human being, unless maybe you're small. Maybe if you're tiny, you don't care. Okay, that's an important point. If you say you're satisfied, I wonder how tall you are. But I can't believe anyone's satisfied. It's a miserable, horrible experience from the minute you get a ticket until you get on the plane. Oh, it must be worse. You're right. It's worse for people who look Middle Eastern or anything like that. I'm sure that's way worse. I mean, it is freaking awful. It's I've got TSA. You know, I walk right through the thing. It still sucks. I can't even imagine what regular people do. I would shoot myself. I would just not take planes. You know, there's a certain point where I would just say, forget it. It's just not worth it. You know, I got the TSA thing. I even have this thing called Clear. Clear is a service where they walk you through like you're a celebrity, but it's only available at certain airports. But I really like that. They fingerprint you and everything. There's a whole big thing to do to get that. Eye scan. In fact, they gave me an eye scan. That was cool. I like that. But there's Clear, and I fly out of nice airports like Kennedy, LaGuardia, Newark. They all have like nice food and stuff like that, so it's not horrible. But you have to get there an hour and a half before the plane leaves to go to frickin' Florida for a 2-hour flight. That's just ridiculous. It turns into a 4.5-hour flight. Yeah, and of course, in this country, there's no choice because we don't have high-speed trains. So there's no competition. And then it's expensive, and then it's just ridiculous. It cost me $400 last time I went to Florida for that 2-hour flight. You know, and you flying with kids and crap. It's just insane. Oh, and the bag fees. Come on, how is it possible that people flying these planes could be that satisfied? I forgot about the bag fees. And then the ticket price isn't really the ticket price because they also charge you for every bag you check. And yes, seats do not recline. I agree with that. That's my assessment too. Unless I have the worst seat luck in the world, and you do too. I'd say 4 out of 5 seats I sit in don't recline. And it's got to be by design because they don't recline. And I'm sure they don't recline because remember a couple of years ago, people were furious about getting their knees crushed because now the seats are so close together that if the guy in front of you does recline, he bangs into your knees if you're a tall person. So it's crazy. It really is. And they don't even bother putting on videos. Some of them, they don't have. If they have a video, it's an old video. It's hardly ever a good video in your screen, which makes no sense, since that part of a phone probably costs about $50, or 100 if you go LED. But a normal little screen attached to a wire in a plane is not an expensive item, and very, very few airplanes have updated screens. It's so freaking annoying. And I fly Delta, JetBlue, United. Those are my main ones, I think. Who else? I won't fly Spirit anymore. I used to like Spirit because it was cheap and it sucked. But it sucked, but at least it was cheap. At least it was like you were getting on the plane, like, oh my God, it's $50 to go to Florida. I don't care if it's like a crowded bus. But that ended once they got people start. There was a good trick. It's like MoviePass. Once you get people to start using it, they jacked up the prices. They charge you they basically have a breathing fee. I mean, if you want to breathe on the plane, there's a fee for that. They hit you for every single thing you do, including your carry-on items. It turns out costing more than a regular airline. Makes no sense, and it still sucks, and it's still awful experience. Overall, I think JetBlue is probably the best one that I take anyway. But randomly you get good planes. Virgin, of course, is fantastic, but that's only if you're going out west. But I don't understand. I mean, seriously, would anyone please speak up? I'm not going to make fun of you, but speak up if you've taken coach and you find it a satisfying experience. I cannot believe that they could make a statement like this. I don't see how this can possibly exist. I would like an investigation to be done. I think this is a completely fake survey. Let's see what they say. The overall satisfaction increases by 6 points to 762. A 7-year trend of performance increases. Annual improvement in overall customer satisfaction is driven by an increased satisfaction with the aircraft. The planes are nice. I mean, that's not really the point. A better experience with boarding and deplaning and baggage. I will say the bags do come faster. I'll give them that. Reservation system, that's pretty easy, all right? Satisfaction with cost, no. Fees, are you freaking kidding? How can anyone be satisfied with the bullshit they do with fees? Contributing improved customer perception. The overhead storage. How many times do you get told they can't fit your bags? An area study. Maybe I just go to too popular places. Maybe if you go to places no one goes to, it's easier. Airlines continue to struggle with electronic devices, blah, blah, blah. I don't get it. All right, so JetBlue ranks second. I agree with that. I agree. Well, wait, low cost. Oh, Southwest. That's right. I fly Southwest sometimes. They're pretty good. I agree with the order of airlines. Alaska, Virgin, not Alaska, but Virgin is the best. Delta's pretty good. Southwest good. JetBlue good. Now, see, Southwest is kind of what Spirit used to be. It's like you don't expect anything out of it, and it's not a great trip, but they do their best. They certainly try hard to make it as good as they can, and it's a cheap flight. All right, Stree says, hang on, flying. All right, Jow says flying Airbus seems to be a better plane than Boeing's. Sri says, I am okay with airlines, but I'm El Cheapo and my expectations are very low. It's not airlines. Not the airlines are getting better, my expectations are low. Maybe that's true. Maybe that's right. You're just glad there's a freaking plane. It stayed in the air. 10 out of 10. ATL? I don't know ATL. To Costa Rica and back is around 325. Oh, Atlanta. Thought that was an airline. Atlanta to Costa Rica is 325. Really, I gotta try that. I gotta do that next time in Florida. I'd love to go to Costa Rica for a couple of days. All right. Anyway, markets. Let's see what's going on in the market. That's the question. Whoa! Big rallies. All right. So we've got a huge pop in the S&P. We're up to, don't forget, 2728 is our line that we feel is the top, and it raced right back to it basically. The Nasdaq hit 60, did just about 7,000 again, which is our shorting spot there. I started shorting. I'm down on the Russell. I started shorting. I'll have to change to RTY just so I stop getting confused. I did that last week, and I apologize. We were shorting RTY and talking about TF. But it's the same thing. They actually are in the same spot. The difference is, in the active trading chart, if you trade RTY, wait a minute, TF. Oh shit. TF has these boxes that I like, these elevators, and RTY does not. I'm going to go back to trading TF. For a while, Thinkorswim took TF away, but now it's back. I'm certainly going to trade this because I like it better when I can see the bids and the ask, which you can't do on the Nasdaq, which makes it really annoying to trade. But you can on the other guys, so I'm happy about that. Now, notice I'm down like $3,000 on the S&P because I started shorting God knows where, probably around here, and it popped up on me. But I have conviction, so I'm pretty positive it's going to go down once there's some serious volume. And the same thing goes in the Russell. I think 1650 is a great spot to short these guys. You got 26,650, 24,650 here, and like I said, you got 7,000 there was rejected, and we'll see what happens during the day. But also of note, the dollar, there it is. The dollar had, look at this. The dollar went from here all the way to here. So we're back to like Monday. Well, back to basically where we were on Friday. And so a lot of the whole, the whole sell-off, stronger dollar, whole now weaker dollar. You can see the mirror, the reverse mirror, trading to all the indexes. When the dollar goes up, they go down. When the dollar goes down, they go up. So that's been a big factor, and it's a huge factor today because I mean it just ripped down since 1:30 this morning. It ripped down like a full percentage point. That's a massive move in the dollar. Oil blasted back up. It's up 2.5%. Gasoline's up 1.5%. Natural gas is still falling off. Natural gas is falling off because they're forecasting a not too hot summer, and also that Russia is scrambling to make deals with China and Europe to supply much more natural gas than they have been. And if they do that now, the big thing is they're putting a pipeline like through Poland or something like that. And what it's going to do, see, here's the thing. Because Trump is such a douchebag, we aren't making deals that we should be making, and nobody trusts us to make a deal. So Russia benefits from all this because now they're making a deal that nobody in NATO would have allowed, which is they're going to become the primary supplier of energy to Poland by putting in this natural gas pipeline. And also, eventually, they'll use that to go into the rest of Europe. So all Russia has to do is reliably supply Poland with natural gas, and other countries in Europe are going to start saying, oh, we'll take some too. And presto, Putin, who owns the natural gas and owns these oil companies, is going to make billions and billions of dollars because Donald Trump is president. Not that that's collusion. just a huge benefit that happens to accrue to Putin because of Trump's incredibly bad foreign policy. So that's where we are with that. But that's hurting us on the price of natural gas, because natural gas exporting was supposed to be our thing in the United States. And it would have been our thing if other countries didn't think we were crazy and don't want, and to them, we've actually created a situation where people are willing to negotiate with Putin and let him put a noose around their neck and have them depend on him for energy supplies rather than the United States of America, because they don't know what kind of nutty stuff we're going to do next. And people will say you shouldn't talk about politics and whatever, but and maybe I shouldn't talk about politics and say Trump's an idiot, but he's a moron. And policies are idiotic, and it's a big problem, and it's going to hurt us very, very badly. And here's some evidence of it, because natural gas should be going up and up and up, because we are the Saudi Arabia of natural gas, but it doesn't matter if nobody wants to do like Iran, if nobody wants to do business with you. You can have all the gas in the world, but nobody wants our gas, because they don't know if we're going to put a tariff on it or put trade restrictions or cut off somebody's supply like some psychotic strongman, which used to be Putin's job. Can you imagine not trusting the United States not to leverage their supplies of natural gas to force you into making deals? But that's where we are now. We are what Russia used to be, and we are getting treated like that in trade. It's very bad, and it's not going to be just natural gas. It's going to be a lot of stuff that's going to start biting us in the ass. Anyhow, so I'm very upset with that. Long term, I still think natural gas goes up because people are more and more using it for all kinds of things, liquefied natural gas. But like I said, short term, things like this hurt us. But again, it's an opportunity we can buy some. Hopefully, it comes down to the 60s. Where is 60s? Here's 65. Hopefully, it comes down to the 60s, and we can buy some V8 down there. This is a very good price for V8 at the moment. All right, I got stopped out when it came. When it bounced off 3, of course, we stopped out, and now we're just waiting for a better entry. But we haven't so far seen any kind of real strength. We're going to have to wait and see. Meanwhile, up and up these guys go, so, we can't really do anything. We'll have to watch these 27, 28 breaks. You can't short anything. So we'll see how that goes. How many RT-wide shorts do you hold? Shouldn't the dollar sell-off, David says, shouldn't the dollar sell-off hurt the RTY rally? It's not all about the dollar. I mean, it's going to rally up with the other things. Interestingly, of course, the strong dollar was why the Russell kept going up even though the other ones went down. Now it's just going up because everybody else is going up. But eventually, I think it's going to normalize. So we will see what happens. As to how many RTYs I have, I think I have 8. I'll check. RTY. Yeah, I have 8 short there. So I got a $5,000 loss here now and a $2,000 loss here now. But that's like not even half of what I made yesterday. So I'm just positioning for the next drop. If I don't get the next drop, I'm going to lose half of what I made yesterday. But that's the worst that's going to happen. Like I said, if 27, 28 pops, I'm just going to have to give up and wait for a better opportunity. But I strongly feel this is going to be the end. So in that case, oh, by the way, and this is what we talked about last week, if I'm going to stop out at 27, 28, why wouldn't I add more shorts here? Because I can't get hurt much by the 2. If I add 2 here, and now my average is 27.17, it's not going to hurt me just going over here if I'm going to stop out. But you have to have the discipline to really stop out. And that goes for these guys too, because I'll stop out of these if the Russell goes over 27.28. Now these guys are only $5 each, so $5 per contract per tick. So I'm not getting my price. I'm not going to stay in though. So I'm really believe, and of course I'll give it to 27.30, but I really firmly believe that we're going to stop here. You got the Dow also has to make 24/7. So that's a tough line. The NASDAQ, we already know, is failing at 7,000. So, and again, I think this whole thing is a prop job. And let's take a look at why. Let's see if the volumes improve, but it was pathetic before. So we go to SPY, and I believe this data is delayed, probably 20 minutes. It says real time. I don't believe it. But you see, we had 114,000 down volume yesterday. Today it's 130. So we got 2 hours to go, but the last 2 hours figure is going to be a lot more. Probably end up about 60, 70. But much lower volume than yesterday. So the up volume is lower than down volume. We're back to where we were on the close of May 25th. And I don't see why we would go up any higher, really. I don't think we will close higher than we were if you don't even have the volume to back it up. But anything could happen, so you don't know. But I'm just hoping really to double dip. So I want to have a large position because I strongly believe we're going to go lower. So that's why I'm doing this, even though it's down 5,000. If we go back down to here, of course, I'll be up 20,000. So we'll see what happens. And I'm not counting on that either, but I'm just saying, I mean, I want to have a nice position, so I kept buying, even though it was going against me. But the more sensible way to play is to use the 24/7 line on the Dow, and if we hit that, you do a short, and then use that for a stop, and that way you can't lose a lot of money. As I said last week, I like to scale into large positions, so I do take substantial losses sometimes while I'm moving in. But then when you're scaling in, you don't forget to scale out. So right now my break even is 27.17, but you see this red line here? I'll be lucky to get to 27.20. So I'm going to start taking them off even when it's up here. Even though I'm not even, it's still better than I was. That's my attitude about it. And that's weird. You don't see this very often. Look at the bid and ask is way below the last sale. So either something's broken here or I couldn't explain it, frankly. I mean, that's very unusual. Here too, look at that. It's like all these are fake. I think they're faking. I think what they're doing is they have these bots are executing trades at a strike. It's like now it wouldn't be the same firm, but it would be the same controlled people. But one guy's putting in a bid and one guy's putting in the ask, like a millisecond apart. So the only person who fills it is you. So in other words, you bid and ask at the same time and pop it in. You get the fill and you're done. It's a net neutral transaction for the guy who's controlling both sides, but it fakes a higher strike than what you've actually got. Because that's what this looks like to me. This looks really bogus. So we'll wait and see what happens. But I just don't believe it. I don't believe the volume's not enough. The action's not right. It doesn't look legitimate what's going on right now. So we'll see. And plus, we're hitting some very good stopping lines that make sense to short. So I say yes to shorting 1650, yes to shorting 24/7, and yes to shorting, obviously, 27.28. I mean, that's been the same short forever. So officially, those are the lines, and we'll see what actually happens. Like I said, I was already scaling in because I had the intention of having large positions. And I'm tempted to get a couple more here, but I'm already pretty deep on the S&P, so I think I'm going to leave it. I think that's good enough. Let's see. What's your cost basis? My cost basis is whatever the average was. RTY for September or June? I'm pretty sure they're September's, but I don't know. Whatever the default is. Oh, that says June. There you go. That answers that question. Doesn't matter. I'm not going to be in it for more than today. And these are June too. So one's a basis is 1644 on the Russell, and on the S&P 1217. I'm sorry, 2717. So that's where we're at. 3 says, can you review our hedges? DXD, SQQ, DXD seem to have reverse split. Oh, did it? I hate that. David says, I'm scaling in like what you did. I was wondering if you're going to hold overnight. I'm not going to hold if it's over the line. It doesn't matter overnight or not. So if I'm going to sleep and it's up over and it's here, I would probably close it. I don't know. It depends on how I feel. It depends on what I'm reading between now and then. But I really believe in this position, so I'd hold one of them most likely overnight. I'd probably hold the Russell because I just think that's a little overdone. But it depends on the news. It depends on a lot of things. But anytime it goes over 27.28, really the 27.30 line, I'm going to just give up and just play some other day because it's not worth sticking it out if it's really blasting up higher. But I just don't see. I haven't read anything in the news. I haven't seen anything to tell me that I should be taking this seriously. So I'm not so far. Let's see. Yeah, let's see if anything happened. Bezos will expand space ventures. Just like, weird. Brazil truckers still see Brazil is still on strike. Koreans having a surprise meeting at the. Oh, what? See that this is a peace thing. Everybody loves that. Apparently, the Koreans are meeting without Trump, so that's good. Let them get the peace prize. Real estate isn't showing near-term cracks. That's good, I guess. Trump is Trump tweets details of his offer of his negotiation. This is so insane. It's like, remember when the president used to get on TV and actually talk about things? Expect to pay more at the pump this Memorial Day weekend. What? Where am I? Saturday? What the hell's wrong with Seeking Alpha? That's pretty funny. Oh, I heard about this. Holy cow. Everybody's talking about this in the pits. Bill Gross, James Fund, lost 3% yesterday. Nobody ever, you don't lose 3% in a bond fund. Oh, says because not because of Italian paper, but thanks to the corresponding rally everywhere else. Oh, I see. He was short, and our bonds rallied, and he got screwed over because he was shorting. That's bad. His fund's down 5.9%. Wow. He used to be such a guy. He used to know that market backward, forward, and sideways. Ukraine threatens to seize Gazprom. Windstream, who cares? Stocks led by the surging energy sector. Oh, great. So some things killing the consumer is boosting the market. Exxon shareholders don't care. German jobless rate, multi-year low. Yes. Tesla perks up on Model 3 recommendation. De Beers sells lab-grown diamonds. That's interesting. They're going to sell a line of lab-grown. I guess if you can't beat them, join them because it's 200 for a quarter carat. These are flawless diamonds. 200 for a quarter carat, 800 for a 1 carat. Who is going to want regular diamonds anymore? German retail sales rebound. That's good. Mine is in the Congo. It's Glencore mostly. See, nothing. There's nothing going. There's nothing really bullish going on here. Why would we be up so much? I mean, you could say yesterday we shouldn't have been down so much. That's a valid point, but I don't see why we should be fully recovering when clearly the Italian problem is still a problem. So we shall see. All right, so we're going to look at DXD and the hedges. Does the beige book matter at 2 p.m.? Well, it always matters a little bit, but it's worth looking at, but it's not like a life and death thing. When's 2 p.m.? Well, it's another half hour. All right, we'll take a look at it, though. Somebody probably has to remind me again, but it's worth it. All the beige book is the Fed managers, the Fed presidents in each region. That all they do is they talk. They pick up the phone and they talk to their friends or people on a Rolodex that they've got a list of like top manufacturers in the area. So whoever you've got in your zone, you're going to talk to. So the New York guy's going to talk to Goldman Sachs and J.P. Morgan. They're going to talk to some of the bigger manufacturers in New York. They'll talk to like the guy at Macy's. They'll talk. They just want to anecdotally get an idea of what's going on. And they send out these surveys, but these guys aren't big on survey answering. That the head guy, somebody fills out a survey, and it just answers some key questions, and then they create a report based on what they're hearing. And so it's very anecdotal. It's not a real thing. You have to realize that the people they're polling are top 1% people. They're talking to guys who run huge companies. So obviously, top 1% people are always in a great mood in this country, especially now because they're not paying taxes, they're making money, and they're going to delude themselves into thinking that things are going great for everybody. But I hope a lot of you guys are aware that things are not that great for everybody. In fact, the reason Trump is successful is because there's a huge portion of America that feels like they're getting totally screwed over, and they think Trump is going to fix that. Yet all he's done is screw them over since he's been president. But at least he says he's going to do something. Nobody else is really doing that. As the Democrats are terrible at messaging, because they're like, they don't explain why they want to do stuff. They just act like basically communists and say we want to tax and this and that, and they don't say, they don't, because they don't have the balls to say we want to tax these guys. Bernie does, but nobody else. Bernie says we're taxing the rich bastards, not you. He's smart. That's why he was so popular. But the regular Democrats, they're too deep with the donors, and they don't want to say they can't run on a platform that says I'm going to tax my donors, and then go around asking for donations so they can tax the crap out of you. It's a broken system, it really is. So the Democrats just don't have a coherent message that explains what they're trying to do, and the Republicans do, even though it's a lie, basically to the bottom 80%. So they're not trying to do that at all. But that's their message, so people like it. Anywho, what were we going to do? We were going to look at the hedges. That's right. That was the most important thing. So anyway, anecdotal. That was my point. So the beige book is very anecdotal, and you can't go by it. All right. So DXD had a split. That is very concerning. Where's DXD? We don't have DXD. All right. We don't have it in the short-term portfolio, unless I've made some kind of mistake. In the options opportunity portfolio, we don't have DXD. And I apologize if I have not updated these I don't know if we made any corrections to it. Here's the SQQQ and here's TZA. Those are the hedges we seem to have in the short-term portfolio. And SQQQ, we're right on the money. We got 40 longs and 20 shorts, 20 short calls. Currently a small profit, nothing to worry about there. And TZA, we have 10 calls. I'm sorry, we have 50 $10 calls, which are above the money, so out of the money. But TZA is a very fast mover. And then we have the short 20s. Those are dead. We should buy those back. Because what's the point? All the way into January of 2019, there's no way these are going to help us, and there's nothing these are going to do. And to wait, since we collected already $1.42 out of 170, which is there it is, 83.5%. We've already made 83.5% of the money. It's going to take the rest of this year, 5 more months, 6 more months to recognize the rest of the money. So actually 7 more months if I do math correctly. So 7 or 8 more months counting January. So anyway, basically it's a long time before we're going to see that 28 cents. It's pointless because the only thing it's going to do is if TZA pops, instead of realizing the full gain that we're going to get back on the 50 longs, what's going to happen is we're going to it's going to start gaining also, and then we're just going to have no net gain on the spread. So that makes no sense. So I say buy it back, and if TZA goes lower, here you go. So we buy these back for nothing. It's only $700. Now we've got the 10s. So let's take a look at what the TZA 10s look like. TZA. And these are January. So the January 10s are 115, let's say, because 110, 120. Now, these guys are 185. So it would be negligent not to spend what do we say, 115, 70 cents to roll down $2 into the money. And also because we can then turn around and sell some 12s if we want, which we don't want right now, but let's say we sell some 12s for 70 cents and half of those. So then we're only spending 35 cents to roll down to a much better spread. But I don't see the point of that right now, as I think everything's toppy. But this is something we should absolutely take advantage of. You've got 115 here, 185 here. It's only going to cost you 70 cents to roll down $2, puts you $1.31 in the money. So that's a good investment. Now, the only problem with TZA, though, is even if the market, if the Russell falls 10%, TZA is only going to go up 30%. 30% of 9 is not a lot of money. It's $2 basically. So we're only going to get to 11 on a 10% drop. So if we have the 7s, we're going to be. If we have the 8s, we're going to be in good shape. We're going to be at least $3. But if we have the 10s and it goes to 11, who cares? But the problem is, unfortunately, and these guys will probably reverse split eventually. Unfortunately, TZA is losing its pop. It doesn't do us any good to make, it doesn't do us any good to get that kind of movement. But what about TNA? So if TZA is bottomy, then TNA must be toppy. That's a 3 times bullish Russell. So now we have to consider, maybe we want to make a different bet. Maybe we want to make a bearish bet on TNA. And you see why? Because let's say, again, if the Russell pops 10%, TNA is going to go down 30%. 30% of $83 is, I don't know, a lot of money. It's like 24, 25, 27 bucks, let's say. So that means that we're looking for a $27 move. So our target here is going to be 60 or lower. So we can sell the 65 puts for $5, 480, or let's say 480. And what can we buy then? Can we buy the 80s? Kind of expensive. I'd say $10 for the 80s. So if those are 10 and the 65s are 5, so let's say it's $5 on a $15 spread. So is it better? That's the question though. Is it really better? Because it's the same thing. Because actually, if you think about it, we're putting in 5. We're only going to make 10, so we make 200%. If, on the other hand, we go back to TZA, and let's say, and let's talk about the split, not, let's talk about a spread. So let's say we buy this for 185 and we sell this for 75, the 12. That's $1.10. But in that one, we're in the money, and it pays $4, which is still the same $3 profit. Which is actually so it actually pays more because we get a $3 profit, and we're starting off in the money, which the TNA is not. So I hope you guys follow that and ask questions if you didn't. But the concept is, after looking at it carefully, my decision would be I'm going to stick with TZA because I can make more money on the same 10% move in the Russell. I thought maybe TNA would be better for us, but it's not, because just the option pricing on TNA is not as favorable as it is on TZA. Because we can take a position, and again, I'm talking about if you did it net from scratch, we can take a position, the 8-12 split for $1.10, that's in the money. We're at more than 9-10, so you're getting 100% in the money. You get every penny of a move up, and you're 100% in the money, and your upside potential is 290 off of 110. Whereas the other one, your upside potential is 15 off of 5, which is less, significantly less. So that's what I do before I make picks. I do that. I look at every angle, trying to figure out which one's the better one. This time I thought maybe it was time to do something different, but it's not. But you always have to think both ways and look at things upside down and sideways before you start getting into these option plays. You want to think about, am I doing the best possible thing? So RSQ, yeah, if TZA gets down much below 10, it's going to split. They're going to have, they always kind of try to keep them over 10. So it just depends, when you get down there, that's when you're in the danger zone. And let's see. Still going up the market. Okay, so DXD, as to DXD, that's not in the, well, we looked at that. We didn't look at SQQQ. Let's look at that one in the short-term portfolio. Sorry, this is the options opportunity portfolio. Oh, we did look at SQQ. Okay, so we're done. That's that. So now we'll look at the short-term portfolio and see how they're doing. They're not down that much. It's not so bad. We only have the $8 calls, but they're for July. So they're actually kind of, wait, 0? Oh, because it's split. Oh. All right, well, I don't have the updated thing, so I don't even know what it is. I assume it was a 1 for 2. Does anyone know? What are we talking about for DXD split? DXD reverse split. A 1 for 4. Wow. Okay. May 11th, this was a 1. No, wait, no, it's 212. Wait a second. What? How do you read this thing? Okay, May 11th, 1 for 4. Okay, here you go. May 24th, this is a 1 for 4. It's still 1 for 4. Okay, so basically what this does is, and I'll have to just check with the broker and fix it because it's not directly linked to the broker, so I have to find out what happened. If it's 1 for 4, that means we now have 25 of the $32 calls. Now, it's actually okay. There's nothing wrong with that, but let's take a look at what they look like now. So DXD. Why are you making that noise? All right, DXD. What were those, Julys? So we're in the money. That's not bad. We have the July 32s. They're really worth $2. Oh, that's interesting. That means we're getting screwed in the short-term portfolio because we're not realizing about $5,000 worth of value in that thing. Because we have 25 of these. Here's the old ones. The July, I don't know if it's going to show value here, but we'll see. So we have the July 8s. And you can see the July 8s still have, well, the last sale was 70 cents. So it's really about, that would be $7,000. Oh, wait. Yeah, the 8s. So that'd be like $7,000 if you look at these. But the reality is we get adjusted and we're going to end up with the 32s. So that's how it's going to be. So meanwhile, obviously, the solution in DXD, if you have these, although your broker should have automatically transferred them, but if you have these and you sell those for $7,000 and you pick up the, well, I'd go further out in time, frankly. I would get the new August maybe or October even. The 32s here. See these July 32s. Oh, what a mess. July 32s at $2. The August 32s are $240, $230. The October 32s are $293. So that's a fair amount to pay for the month. So you're paying about 30 cents a month to extend it. So in this case, I wouldn't mind, but on the whole, I think I'd rather probably pick up the October 29. Let's see, 29's a 5. Wait, no, sorry. Yeah, 29's a 5. And the 35's are 2. So that for $3 you get into a $10 spread. And again, 3-to-1 is about what we look for to get paid on these splits. Now, of course, we don't get paid, but that's not the point. So let's say we cashed out the DXDs and we took $7,000 off the table, right? If we just cashed that out. We originally put in $11,000, so we're down $4,000. That's the cost of your insurance. From March until May, our insurance cost has been $4,000 on this particular one. That's just part of playing the game. Just like when you walk around living and you have life insurance. It's like you want to keep living, so therefore the life insurance is a waste. Or health insurance, same thing. I don't want to be in the hospital, but if I am in the hospital, I got insurance to pay for it. That's what this is. You're not supposed to win on your hedges. The trick is, though, here's the thing. If you make $100,000 a year and you insure yourself for $10 million, your policy is going to be like $50,000 a year. It's going to be half of your income. And that's too much. You've got too much insurance. It's not necessary. You're covering more money than you're going to make in your working life. It's not supposed to be a lottery ticket. It's insurance in case you die, to help the people who depend on you now to survive. So the proper way to calculate insurance is to sit there and look at your family and say, well, what do they need if I die? What's going to get them through a reasonable amount of time? So, I say, in my case, I look at it and say, okay, I'd say I'm 55 now. I've got 2 kids going to college. College is already paid for. Obviously, worst comes to worst. I don't want, it's a weird thing because I would never give them $1 million, but if I die, I'm sure over the course of my life I'll end up giving them $1 million each. So I would probably leave them $1 million in a policy. So I need $2 million for the kids. Then I got to look at my wife and say, well, what does she need? And obviously, if I die, she still keeps the assets I have in the house and so on and so forth. She's not so badly off, but now my income is gone. So I just try to replace that. So I'd probably get basically like a $5 million policy is enough to make me happy. But I have a lot of money. But you have to be realistic about what it is, because a $5 million policy it probably costs like $20-something thousand a year. I'm sure I'm spending at least $200 a month on the policy premium, maybe $300 a month on the policy. So you have to think about what you're spending to insure yourself. And of course, mine's really old, so it was cheap. It's not like I just bought it today. But you got to be realistic about how much money you can afford to spend on insurance and whatever. So the beauty about long-term portfolios is that they make money because we're always selling premium and we're always making money. So we know if the market doesn't crash, we're going to make money. And if you go back to the review, when did I do the last review? Oh, that was like not long ago at all. I don't know. In one of these things, I think I still went over the numbers. $18,000 gain, 4,000 more coming. Okay. What was this one? This EOOP? No, it's a long-term portfolio. Did I really do that for the whole long-term portfolio? No, I did not. It was kind of random. I was going to say, because that would be tedious. I usually talk about how much is coming on the portfolios that are more for the beginners, like the OOP. So let's see if I did that here. I didn't, but I did on the last review. So let's see. Go back to that review. I know I did a big review last time. Oh, here it is. Okay, so and again, I think we talked about this last time, so it's not, I don't want to make a big thing of it. But look, we have a plan. Each position. If Apple goes the way it should go, we make $4,600. If CHL goes the way it should go, we make $2,100. If FTR goes the way it should go, $5,600. So we look at the position, say, are they on track? Barrett Gold is for $16,000. So if the market goes up, I'm going to make this much, this much, this much, and I think it comes out to like $140,000 in the options opportunity portfolio. If, of course, these positions do what we think they're going to do. Yeah, $140,000 of upside potential. That means every month because it's going to be until 2020, so it's 20 months. Every month we should make $5,000, $6,000. You know, 4,000. Let's say $4,000 to $6,000 range. That should be a normal month in the options opportunity portfolio. Now, so how much should I spend on insurance? Well, I'm buying 3-to-1 insurance. I don't need to insure 100% downside coverage. I want to cover about 50%. So as long as I'm covering a loss on a 10% market dip, let's say a 10% market dip costs us $30,000 because we're leveraged, so it's going to cost us more than 10%. Let's say it costs us $30,000. I want to make sure I have at least $15,000 worth of insurance. It might cost us $50,000, so then I want to have a little bit more insurance. But that's what you got to look at. What's it going to really cost us? What do we need? Not what you want. Not I want to be 100% covered. It's not realistic. As I said last week, when I said cash these things out, because we were up nicely last week, weren't we? When I said let's cash out these portfolios, because it's stupid to play them when the market was so high. And you can see now, a week later, we've made no progress at all. So in fact, I think they're probably, on the whole, they're all down because the market's gyrating in a bad way. And that's what we expected to happen, though. And I said we are going to lose money. You're going to backtrack on the portfolios. So it's easier to cash them out and come back and buy whatever's on sale later, rather than trying to nurse every single position. But from an insurance standpoint, you want to make sure you're hedged against it. But that's going to cost you money. So you plan on saying, if I'm going to make $140,000, then I'm going to spend 1/4 of that, which is $35,000, insuring it. So yeah, so when I lose $4,000 in 2 months on a DXD hedge, that's exactly what I should be losing. I should be losing about that much each month. I'm sorry, every 2 months I should be losing about $4,000. $2,000 a month is nothing to lose. So like I said, so basically, wow, and the whole explanation in the middle of like looking at the hedge. So basically, you take your $7,000 off of here, the 70 at 70 cents, and you then say, okay, now we're going to move to October in the new ones, and in October we're going to take what I say the wow, you can take the 30s. I think I said that though. You can take the 30s for $4 or just over $4, and sell the 36s for $2. Not $2 though. Well, wait, 35. $2 for these. 29.35. All right. So the 29.35. No, I don't like these numbers. Let me try again. 33. If we go to 32, we're at 260. 260 minus 150. That's not bad. Okay. So let's say we pick up the 33, 37 bull call spread. That's a $4 spread that you can pick up for $1. Now we got a good ratio. So then you take your $7,000 and you put it into this spread, the 33, 37 bull call spread at about $1. And then you can buy 70 of those. So now you have a little bit less protection than you had last time. But last time, when we set up the protection was when? Was February, March. So in March, you have to think about this. There's all factors in. Back in March, if I can find the futures. Back in March, the Dow was here. Well, actually, it's in the same place. So back in March, the Dow was here, and now it's still here. So we've just lost the decay money so far. And we're still hedging that doesn't go below here. But in this amount of time, we've clearly made money on our hedges in the portfolio, and a lot more than we've lost. I'm sorry, in the longs in the portfolio, a lot more than we've lost. If the market keeps going up, we're going to make a lot of money. We already know that for sure. If the market goes down, we'll have to do it again. We'll make, if it goes down, we'll make some money on the hedges, we'll have some cash, and we'll start working the longs again. It just depends where we catch it. At any given day, it's random. Had we looked at this yesterday, we would have seen the hedges doing a lot better than they are. Ugh, I hate that. That is the most annoying thing. It pops up every time you go into this thing. All right, so where are we? Man, I'm still hovering at the same places on the indexes. All right, so DXD, SQQ is going to split. How are they going to split? We do have DXD. We closed the short calls and left the long calls for the more. Yeah, we did that, right? That's the way it is. What is going on here? That's weird. This is doing the opposite of what I do with my mouse. Like if I roll my mouse up, then the thing goes down. You guys, I don't think you guys can see this. So these are the questions you're asking. Okay. All right. So split is definitely 4. ES testing 2728. They're trying hard. My broker says the DXD calls can be max cashed out for 35 to 37 because they're not volume. How do you still extract 7? Well, the last call was 7, and I think your broker's a piece of crap if that's what he's telling you. You can offer whatever you want. You don't have to listen to him. That's I mean, that just takes a lot of freaking nerve. The last transaction was 70. The last transaction on the $9 calls was 25, and he's telling you only get a dime more for $1 more. No, that's absolutely untrue. Hang on, let me check something. On my other computer, I can see something more. I'll tell you when the last sales were and so on and so forth. So DXD, they're Junes or Julys. What are they? They are, shit. Are they Julys? Maybe they're Junes. If they're Junes, I'm wrong, but I think they're Julys. July. So the July old. Oh, somebody just got 60, right? Right the second we were looking at it. Somebody just got 60. So you tell your broker he's a piece of shit, get a new broker. Seriously, I'm not joking. Any broker that tells you what that guy told you is willing to rip you off and screw you out of huge amounts of money. He basically lied to you. I mean, there's just no possible way an actual broker who knows what he's doing could believe that was true. A huge bunch just went off right now. Well, I said this second just went off at 60 cents. That's such complete bullshit. Right while we were talking about it, 60 cents. And it's a very large quantity too. So somebody probably one of you guys did it. So anyway, so that's the story. When you know, he's splitting the bid ask or whatever he's doing, but to give you that advice, when you can clearly see that these are going off at 165, how is this going to go more than $1 less than 165? And then these are 25. So I mean, just use your head. What's the average of 165 and 25? That's 180, 190. So not actually the average of that is 95. So I mean, so it should be somewhere between the two anyway, but not all the way down at 25, near 25 for having $1. It makes no sense. I would really run away from that broker. I think that's a terrible, terrible statement, advice, whatever you want to call it. That's complete nonsense. Anyway, so that's how I feel about that. All right, is it time for the beige book? Let's take. Oh, it is. Let's take a look at the beige book. See what's happening. Labor shortages, I can tell you that. Beige book, beige book. I don't like the new beige book. I used to love the beige book, but they changed the format, and I now hate it. May 30th. All right. Economic activity moderate. Few shifts in the pattern of growth. Dallas was an exception. Now, why is Dallas an exception? Energy, oil, economic activity sped up in a solid place. So if you know why something is happening, it's one thing. You have to take that with a grain of salt. Manufacturing shifted into higher gear with more than half the districts reporting a pickup in industrial activity, also driven by energy, but that's still a good effect, knock-on effect. A third of the districts classifying activity as strong. That's very good. Fabricate, we haven't had that language before, so strong is new. Fabricated metals, heavy industrial machinery, electronics were noted as areas of strength. The Internet of Things is going to sustain electronics. We're in a whole new super cycle for electronics. So everything that was good in, all the chip companies and so on and so forth that were good in the old days are going to be good again. That's going to be a long-term cycle that we're going to have to start looking at more seriously. Because there's just so many more things have chips. We did the math like a week or so ago in a chat room, and I was just running down, like I said, look, think about what happened in 1999 that drove the internet boom. All you had was 100 million people in their homes got computers, and 100 million people at their offices got computers. Just rough numbers. And that led to this massive tech boom. And then you started putting like chips in cars and so on and so forth. I said, now though, you have in one car, you have like 10 different computers with sensors and all kinds of crap as self-driving cars. So you're going to have that in 100 million cars, 200 million cars over 20 years. Every TV has chips now. The TV has a TiVo or some kind of DVR that has a chip. Your cable box has a chip. You've got, obviously everyone has a computer, but you also have an iPad and you have a phone that has a chip. So you think about how many things have chips now. And soon your robot will have a chip. You will have a robot. Your robot will have chips. Your fridge will have a chip. Toasters have chips now. It's crazy. So this whole Internet of Things concept, you're talking about so much more volume of product going out than we had back in the day. It's the numbers are going to be astronomical. So it's going to be a huge boom in tech. And it's going to drive us for the next, 10 years or so. So it's going to be a real good thing. So let's see, machinery, electronics, blah, blah, blah. Rising good production led to a higher freight volumes. That's good. Transportation firms. By contrast, consumer spending was soft because we're killing the consumers. That's the only problem. The consumers can't afford this stuff. But fortunately, there are going to be wage pressures that will improve consumer spending. And when there are rising wages, I'm going to get very, very bullish. But wages are lagging. That's what keeps me kind of bearish about things. Non-auto retail sales. That's very specific. Non-auto retail sales moderated, and auto sales were flat because the consumers have no money. Although there was a considerable variation by district and vehicle type, because people in Dallas are getting jobs like crazy in the oil industry and buying cars and whatever. In banking, demand for loans ticked higher. Banks reported increased competition led by high deposit rates. Delinquency rates were mostly stable at low levels. That's not really true. We're seeing an uptake in delinquencies, but it's not, I guess, not alarming yet. Home building and home sales increased modestly. And again, that's been stuttering. Non-residential construction considered moderate. Contacts noted some concern about the uncertainty of trade policy. The more uncertain trade policy is, the more likely the Fed is going to be on hold. And outlooks for near-term growth were generally upbeat. Employment moderate across most districts. Dallas district, where solid widespread growth was reported. Labor market conditions remain tight. Contacts continue to report difficulty filling positions across skill levels. That's what's going to lead to wage inflation. Now, wage inflation is margin pressure for companies. So in the early part of this cycle, the wage inflation is generally bad, but then 3 to 6 months into some, the thing is you have wage inflation and it affects new hires, so it kind of rolls into the companies, hitting them for margin on the way down. So for the next couple of years, they're going to have trouble having good margin because of the wage inflation. But for the consumers, it's not workers, they're consumers. For the consumers that get hired and have more wages and have more spending power, that starts turning over at the same time. But there is a lag because first it hurts the companies, then you see it show up in the spending reports. And then of course the revenues come back to the companies who hired the people. So that's why it's good to pay workers money. They spend money on your stuff and it goes back into your pocket. So as the cycle continues, it becomes a virtuous cycle for everybody and everything goes up. But first you've got to pay the workers, and it still isn't really happening. The reason they're having such trouble filling positions is they're not always putting up the money to do it. And of course, you end up with a labor shortage because you aren't, especially skilled labor, because you aren't paying enough to convince the people who are considering going to college that it's worth it. My daughter Madeline, she's going to college in the fall. She did the math, and she said, "I don't see how this is worth it." She said, "This seems like a waste of money. I'm not gonna get $250,000 worth of education most likely." And she wants to be a psychiatrist. She just doesn't. Other than the fact that she kind of needs a degree to do it, she doesn't see the point because there's nothing she's going to learn in college that's going to give her $250,000 more knowledge than somebody else. So, but she's going because we have the money. It's not like a life and death decision. But a lot of people, that's $250,000 they don't have, and they're not going to do it. So that then leads to a skill shortage. And if you have a skill shortage, you can't fill things. They can't get truck drivers. Truck drivers are a disaster right now. There's just not enough truck drivers to fill the spots. And again, because you have to go to driving school and stuff. You have to go to a special school and learn it, and that's an investment on the part of the guy who wants to be hired as a truck driver. Plus, you have to want that life. And if there's other people, see, here's the thing: truck driver makes good money, but mostly if they buy their own truck and whatever, they'll make $80,000, $100,000 a year, but they got to pay off their truck. So a lot of that money goes into like a mortgage for the truck. Eventually, they cash it all in, and it's a good job. But it's a life on the road. And how many people really want that, especially when there are plenty of perfectly good jobs that don't make you sleep in the back of your truck all the time. So it's hard to find people to fill these jobs. And especially when you're kicking all the immigrants out of the country. It's just ridiculous. Anyway, because usually those jobs can be filled by immigrants, and then other people get other jobs, and everybody's fine. But now we're creating our own labor shortages. Look at this. Truck drivers, salespeople. When's the last time we've needed salespeople? Carpenters, electricians. Yeah, good luck finding these things. Carpenters, electricians, painters. Forget it. Nobody does this stuff anymore. And again, you know who does it? Immigrants. You know who doesn't? You know who we don't have anymore? Immigrants. And IT professionals, more immigrants. That's my younger daughter Jackie. That's what she sees this one coming. She's on the IT path at the moment. Many firms responded to aggregate. However, wages increases remain modest in most districts. Contacts in some districts expected similar employment wage gains in coming months. Prices rose modestly. It's another thing. As you have wage pressure and your company is forced to pay more for workers, how long before you can pass the prices on to your consumers? You have to hire the workers so they have more money so they can afford your more expensive stuff. It's a chicken and egg. You're going to have a bad quarter or two before it turns around. And very, very few companies are willing to do that. There are several reports of rising material costs, notably for steel. That's weird. We put tariffs on steel, and now steel is getting expensive here, so that's not helpful either. Aluminum, oil, same thing. Tariffs on aluminum, and aluminum is getting more expensive. Oil, of course, because of ridiculous policies, getting expensive. Lumber comes from Canada. Cement comes from Mexico. A few districts noted these reports also. So this is all self-inflicted. Every single one of these is part of Trump's bad trade policies. A few districts noted these reports of rising material costs becoming more common across contexts. Input cost increases, along with labor shortage in some sectors, strengthening demand, put upward pressure on prices. Blah 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 blah. Some districts also noted that the retail contacts were more able to pass along prices to their customers than in the recent past. So it is improving a little bit. And then they have these really little teeny tiny things. But I guess if you go to each one, you get the whole deal. So let's see what Dallas has to say, because they're the stars. Economic activity grew at a solid pace with acceleration in manufacturing, expansion of services, energy continued the same pace. Retail spending was mixed. Drought conditions persisted in part of the district. Is that Jackie? That's Jackie. All right, I can't talk to her right now. Retail spending was mixed. Drought conditions persisted in parts of the district. Hiring remained solid despite a tight labor market. Wages and price pressures stayed elevated. Contacts expressed concern about trade uncertainty, rising interest, although outlooks remain positive. So that's our best district, is that one. Hang on a second. What, comma, I am doing the webinar. Okay. So questions here, let's see. Huh? Hang on a second. Now my door. All right, thanks. That's a workman. I have to let him in. All right. So what else are we at? David says it'll be best if you decide to do Smith, SMTH, Smith on the DXD position. Post on the web later. Cheers and everything. Okay. So yeah. If the broker didn't automatically transfer them to the new ones, they didn't split and come up as new options in your portfolio, then basically you'll have to manually do it. And I would certainly I would ask for at least 60 cents, preferably 70 cents, and just wait, and it'll get. Look, bottom line is, if the Dow goes on a day the Dow is going up, you're not going to get a good fill. If the Dow goes down tomorrow, you will get a good fill. It's not an emergency, so just try to get a good fill. Today is not a good day to get a fill. Chips and everything are real pain. Rex says chips and everything. It costs $500 to replace a circuit board and a refrigerator. Oh my God, does it? That's terrible. Where is she going? Ask 1020. I don't know what that means. I really have no idea what you're talking about. All right. Anyway, back to the market. So we're still popping up. Holy cow. I don't like it. Getting killed here. Let's see. Oh, not really worse. We really right at that 27-28 line, though. It's interesting. Oh, and here, see, we're in the same places, basically. So I'm just going to have to let it play out and see what happens. And again, want to keep a tight eye on the news and see what's happening. I want to watch the volume. So at the moment, last time we looked, the volume was 35,000, and I don't know when it was. I guess it was probably a half hour ago. So in a half hour, we've gone to 40,000. So 5,000 in a half hour. That means obviously at this pace, which won't continue, but at this pace, with 2 hours left to trade. Is it 2 hours? No, it's three already, isn't it? No, it's two. Okay. So with 2 hours left to trade, you'll hit 60, which is half of yesterday's volume. But in the last hour, we'll probably do a lot more. So I'd say we're going to be up around 80. Still quite a bit less than yesterday's volume. And again, so as long as the volume is staying low, I don't believe we're going to punch up higher than we are now. And so there's two factors I'm really looking at. Is the volume increasing? And if the volume's increasing and we're not going down, that's a bullish sign. That's not happening. And is the news getting better? I haven't seen any particularly great news. And let's see if any new news came in. Etsy is closing down a wholesale platform. I didn't know they had one. Oh, yeah. Uber asked lenders to lower term loan pricing. Well, yeah, sure, I like to do that too. Always ask your lender to lower their pricing. It's like something you should always do. No smartphone phone growth in 2017 or 18. Wow, really? Well, I guess everybody's got one, right? Hard to say anybody doesn't have a phone that wants one. So if you talk about the total number of phones, I don't think there's a big difference. German inflation 2.2, we know about that. Trump signs right to travel. That's an interesting one. I kind of agree with this. My dad had cancer like Steve Jobs did. There's just no way you're going to live, basically. But there were things to try, but they make it so difficult I guess on the one hand, there's a lot of fake things out there that give you false hope and cost money and the waste and so on and so forth. On the other hand, there are promising things. Like we were at Sloan Kettering, which is a really, really good cancer hospital. And the doctor there, he talked about a couple of things we could try. Now, my dad didn't want to. Bottom line was, in his case, he didn't want to go to Colombia to get a procedure done that may have helped. And help wasn't going to be cured. It was going to be given 6 more months or whatever. He just was like, you know what, I'm going to die. I'm going to die. He's like, he just was like, it's not, I don't want to sit there and go crazy trying to travel around the world trying to do it. Because he had friends who had done that, and obviously a waste of time. His cousin had brain cancer, and he did everything. Oh my God, did he do it? And he actually lived quite a long time with brain cancer. Sorry about that. This is not supposed to rain. If I can make it stop. Nope, doesn't care. Anyway, the one phone I can't stop from ringing. So his cousin had brain cancer, and he lasted for years longer than they thought he would. But he literally did everything. He got operated on like a dozen times. Removing every time he had a new tumor, they would remove it. But anyway, so my father didn't want to do that. He didn't want to be like that because basically, my Uncle David spent probably 75% of those years that he got extra. He spent them in the hospital in recovery. He was in comas a couple of times, so on and so forth. And he had some good days. I remember him coming to a couple of things and doing some family events. And everyone was like, "Oh my God, David's still alive!" But it just wasn't for my dad. He wasn't into it. So, but the point is, anyway, it would be nice if it were easier to try these things, but then you're going to need a watchdog sort of thing that does a good job, because I really worry about people getting ripped off by charlatans on these things. It doesn't guarantee you access to therapy. If you have money, it's great, because then you can do the research and get the best stuff. But if you're just a regular person with your insurance company, I don't think it's really going to work. And it says, since supplies of such products are generally restricted and produced by only a few for clinical trials, insurance coverage is unlikely. So it's a rich man's law. But still, I think frankly, they don't. There's a moral issue, but I think really with when people are terminally ill and you're going to die, why not try something? Especially if you're trying it is going to give better information to other people who it might help down the road. And not, the fact that we, waiting to get everything studied and approved before we try it is not necessarily the best thing. So, I don't know. I think with some oversight, I kind of approve of this thing, basically. That's my opinion on it. But yeah, it's again one of those things that Trump acts like it's going to help everybody, but it's only going to help people rich enough to make those choices. It's still not going to help regular people. Other than hopefully by having 1 million rich guinea pigs, you'll learn something that can help, help in regular stuff. Amazon gains market share, China gains on U.S. So that's nice. What do they mean? Amazon's China sales? China is home to 9 of the world's 20 largest internet companies, compared to 11 for the U.S. The U.S. 5 years ago we had 9 and they had 2, so they're going to pass us. I'd like to see that study. See, there's a report at Recode. I'm not going to read the whole report now, but I mean, oh, nice slides. This is like porn for me. Holy cow. 294 slides. You know what I'll be doing tonight? Holy cow. Look at the charts. Freaking love stuff like that. That's going to be great. All right, cool. Cannot tell you how much I love to read reports like that. It's just so interesting. Bill Gross. Okay, so that's where we were last time. So nothing changing, other than, well, China kicking our ass. Good to know. So to recap, since we last looked, China kicking our ass. Good news for farmers, so that's probably giving them a little kick in the ass right now. German inflation bad. That means their ECB is more likely to tighten. Smartphone growth flat. Not good for Apple. And as goes Apple, so goes everything else. As I noted, I've been quoting that Apple was 3% of the S&P. It turns out Apple is now 4% of the S&P. Are they having a good day? Nope, they're down. Okay, so I'm not sure how they started the day. So it's hard to justify. I don't want to say justify, because Apple does justify it, but they always get a bum rap. When you're going to say we're $1 trillion, they're $920 billion now. 10% more, they're over $1 trillion. So 195 with 205. So before 205, they're $1 trillion company. And it's too much. It's a number that's going to make people question the value of all these companies. And that's why I think it's definitely a ceiling. I think we're at the point where people have to start considering how much of things really worth. And if you look at Amazon, we've got the same problem. Amazon is $786 billion, which is a frickin' joke, because Apple makes $50 billion a year and Amazon makes $3 billion a year. So Amazon, if they doubled to 6 and double again to 12 and double again to 24 and double again, so 4 doubles from now, they will finally catch up to Apple. Yet they're already being valued as much as Apple. That's stupid. And also, you have to realize that of this $3 billion in profit, $3.5 billion is from cloud services. So more than this number is from cloud services, and minus $500 million is from the retail sales that they're going to expand. Because if you think that Amazon is really making money when you order, when you order a 6-pack of razors from Amazon and it arrives the next day for less money than you pay at the 7-Eleven, that it's just not real. It's an unreal situation. And don't forget, Amazon doesn't own the razors. Somebody else is making the money. Amazon didn't buy the razors. All they're doing is acting as a warehouse and shipping station. Their profits are super duper. Their profit. Their money in that for them is nothing, and they're paying for the shipping, and they're paying to insure it somehow, and they're paying for the worker to go to the shelf and get the thing. But Schick still gets their money. So to the extent, in some cases Amazon has agreements with the manufacturers. In some cases they don't buy much stuff for themselves to warehouse it. What they basically do is, like, Schick will send Amazon, 1,000,000 razors, and they will stock it up in their various warehouses. And when they're sold, Amazon will pay Schick. They don't pay them in advance; they pay them when they sell them. So they're acting as a distributor for Schick, and then also for 10,000 other people who produce stuff. But all that accounting work and all the bookkeeping and all the sales and all the collection of money and holding up the website and so on and so forth, that's all stuff Amazon has to do to make this thing work. So it's not a profitable business, and doing more of it doesn't make it more profitable. In theory, if I bought all my groceries from Amazon, and if I bought all my stuff that I go to the mall for at Amazon, in other words, if I bought everything at Amazon and they're coming to my house 3 times a week with $100, $200 worth of stuff each time, then maybe they're going to make some money. But that's not how they work. In fact, that's not even how they work if you order 3 things from Amazon. You get like 3 UPS boxes from Amazon when you order 3 things on the same day. And you're like, what kind of idiots are these? What kind of stupids? Because it's not from the same warehouse. And it just shows you how irrational the system is. Because, especially when you look at the boxes and they're 90% packing, you say, they really could have put all 3 of these things in one box. And honestly, I could have waited a day. I didn't need it a day after I ordered it. I didn't need these 3 things. It's like, I didn't need the batteries and the toothpaste and the mouthwash, on the same day right after I ordered it. I said I was just running low, and I pressed a little button and I got my stuff. And that's it's inefficient, and it's stupid, and it's costly, and there's no way they're making money on it. But it's an exciting top line growth story. And the profits only exciting if you're completely unrealistic, because you're paying $700 billion for $3 billion in sales. That's 250 times earnings. That's not exciting. I don't care if it went from 600 million to 300 to 3 billion. It's still not exciting because it's not fucking anywhere near what I'm paying for it. If I pay my daughter to wash 3 cars and she washes no cars for let's say I give her $15 and she washes no cars, then I'm very pissed I didn't get my $15 worth. Now, if suddenly the next year I give her $15 and she washes 1 car, she's increased the amount of cars she's washed substantially by 100, well over 100%. So it's an incredible growth in cars. In fact, I can extrapolate that next year she'll wash 2 cars. But I'm still not getting my $15 worth. You don't celebrate that. That's unfortunately the mentality that's driving this market. You can't, and these are our leaders. It's not realistic. And one day people are going to wake up. And it doesn't take much. As we saw yesterday, a little problem comes up that's not even a big deal, because who really cares what Italy does? It's like Greece. It's like it kind of matters a little bit, like it changes some things, but it won't do a lot. But what it may lead to bad stuff down the road, like people are going to realize that we're not taking enough risk into account on sovereign debt. But it's a special situation. It's going to take months and months to unfold. It's not something to crash the market over. And I said that yesterday while we were going down. It's a bit of an overreaction at this point. Whoa, big lightning smash on the Eiffel Tower they're showing on TV. It's cool. Wow. That was really major. I don't know if that was bad. The thing's made to take it. It would suck for the people who were in it. We were in that last summer. That was cool. We were up in the Eiffel Tower. Anyway, so it doesn't take much to bring the whole thing tumbling down, which is where we were back in 2007. The last time things were this crazy was 2007. It went on and on for a long time, but then it ultimately finally fell apart. A couple of things started unraveling, and then it began a cascade, and it wasn't safe. This thing yesterday was nothing. That's nothing. If Tesla goes bankrupt, this market is going to crash. If Trump gets into a war, this market's going to crash. A lot of things can cause us to really fall apart. If rates start rising, this market's going to crash. And I mean really rising, not this little tiny control thingies. So there's a lot of ways that things can go south, and it's just a matter of being cautious. So it goes back to the hedging and being careful of your portfolio. And like I said, I was all for cashing out on the summer. And now frankly, we're up so much now that you could practically get out again, almost where we were last week when I was saying get out. But if you don't want a rough ride like we had yesterday, if you don't want to have, get that lump in your throat from everything going down all of a sudden, I would skip the summer. I really would. It's going to be like that. And it could get ugly. Maybe it won't though. Maybe we'll skip through the whole thing and escape all these possible pitfalls. But if you're going to stay in, you got to have your hedges, and that's what I don't like. I mean, the fact is, we're going to have to spend money to improve our hedges, even though our portfolios aren't really going anywhere right now. Which is why I'd rather cash out, so I don't have to protect anything. Where's Maddie going? She's going to UMass and Amherst. That's what she decided on. She was between that and Holyoke, and she went to both, and she decided to go to the more fun school. Now 10:20 say, I asked when you were discussing. I lost track of that whole conversation now. Oh, where is she going? Oh, I see. You asked where is she going, and you meant Maddie, but I had no idea because I was just talking. And yeah, these are not connected. I can't see these. I just have to look at them once in a while. Anyway, so 10:20 asked where my daughter's going to college. That was all. All right. Thoughts on Wynn? Have some of the blah blah blahs. Bull call spreads. Let's get close to 200. I would like to pull out some of the gain. Any ideas or thoughts on a roll for Naomi? So Naomi has the January 160-200 bull call spread in Wynn. I'm surprised they're even doing well, frankly. WYNN. So they're back close to 200, and you've got the January. $160-200. So she's got the 160s, which are now $40-something, 43. She's got the 200s, which are 18. So let's see, 18 minus 43. So we're looking at like $35, right? No. Oh, I'm sorry. Hang on a second. Yes.
So I just need your signature here. So just to go over real quick, that's a keypad, motion, 2 doors, 4 smokes, and 2 key channel lights.
Okay.
Okay.
Great.
No charge to you, everything is 0, whatever it is, they're refunding to you.
Yeah.
Signature here and there.
And where? Okay.
And I'll give you a copy of this also.
Okay.
Thank you for your patience. You were buffering me way too much. So I'm just and that's it, man. Sorry about the inconvenience and everything like
That's
that.
all right.
Hopefully everything's all right, man.
All right, thanks. We'll get under control.
I see you have an existing system. I'm surprised you use it.
Wonderful.
Okay. Have a good day, man.
Thanks. Have a good day. All right. So back to work. So what I say, 44 minus 18 is, or 43 minus 18 is only 25, and it's a $40 spread. So what do you do with it? David says ES above 27.28. We're having a little push into the close. That's very annoying. All right, let's see what happens. All right. It's not that easy to pull it off the table because it is just a bull call spread. So I think, given you have $15 more to make, you probably didn't even make that much so far. I don't know how many you have. If you have one, you really can't do anything about it because you're just, you picked a target and you're on track to make the money. But there's not much you can do with one. You could sell, if you have two, you could sell one September $200 call for $11. And what that would do for you is, if it keeps going up, first of all, it has to go above 211 before you have to even give him his money back, right? If at 211 you would obviously be solidly in the money. You're going to make, if it goes to 220, you would have to give him back 9 more than you paid, but that's only $4.50 per long. And again, it would be at 220, therefore your longs will be all in the money, and you will have made $15 more per contract. So you will have lost $4.50 out of the 15 that you will gain, but that way you've got your hedge. If it goes down, of course, you keep the 11, and maybe you make a little less, but it's $5 per contract cushion to what you've got. But that's, again, only if you have two. If you don't have two, I wouldn't cover 100%. It's too dangerous. But if you have two, I would cover half and try something like that. And Leach just says Harmony. Well, first of all, let's see how much money I'm losing right now. Oh my God. Ugh. 27, 28, 50, and just as bad on the Russell at 52. I'm not going to do anything. I want to see what happens over here, this 30 mark. The Dow's up 350 points. So that's ugly. So what's happening with Harmony? It's not called Harmony. I always call them Harmony, but they're Helios and Matheson, actually. So it's HMNY. And, I just talked about that today, actually. If we look over here, here's what's happening with HMNY. Again, they're being treated. Where's the chart? They're being treated like they're going bankrupt, but they're not acting like they're being bankrupt. HMNY. So they're still down by 46 cents. I just bought some more. For my kid. My kids, I always buy penny stocks for my kids because it's more fun. It's like you give them like some small, also ones that they can relate to, so they know they own MoviePass, so they get interested in what's going on with MoviePass. It's a good way to get them into the stock game. So anyway, both of my kids have 5,000 shares now of MoviePass. So what happened? So today they launched MoviePass Films and acquired Oasis Films, whatever the hell you call this thing. Now, you don't know what Oasis Films is, but they do a lot of stuff. They do they did that prison movie, which is called what? Escape Plan. So that was actually not a bad movie. With Sylvester Stallone and whoever, and Dave Bautista. I don't think that's who was in the first one, but maybe he was. They got Robert De Niro in a movie. They've got Al Pacino. They got so they got real people doing movies. They do small films that are not blockbusters, but that's perfect for MoviePass. In other words, because MoviePass's theory, and it hasn't been tested yet, is, and I wrote this down. MoviePass's theory is that they can send a couple of million people to see a movie. that they can specify a movie and they can get their guys to go because obviously they know what you like, they know what movies you usually go to. Plus, it's free, so it doesn't take much of a push to get someone to see a movie. They can talk it up. They can have a special premiere. They can do all sorts of things to get people in the seats. They're paying for the movie, and the knock on Helios is that they lose money when they pay for the movie. But they don't lose any money if they pay for the movie that they own. Because the way films work is the first weekend, the movie company gets like 80% of the money, and the theater gets 20%. What happens is the longer film runs, the more the theater gets. The next week, maybe it's like 70-30, then it's like 60-40, and then it's 50-50. That's how it works. So like the longer the movie's in the film, the longer the movie runs, the more the theater makes. They get a bigger cut of it for keeping it on the screens. But the first weekend, blockbuster weekends, when things open, that's when the movie company gets most of the money. That's why they push so hard to get you in there the first weekend. And that's why they have they send their people on TV to do all the talk shows and blah, blah, blah. They want everyone in their opening weekend. That's when they make the bulk of their money. And the next weekend too. But after that, they really don't give a crap what the box office is in the third week. Because they're already only getting 60% of the money. So Helios, now I think about it, what's happening is Helios is now going to say, okay, we're going to pay the theater $10 to put you in this movie. You're going to bring a friend, hopefully. This is speculative, but their numbers so far show that for every one person who goes to MoviePass, it's 1.5 people goes with on the average. So usually each ticket MoviePass sales, they get 2.5. So the person who has a MoviePass brings 1 or 2 friends. That's generally what happens. And again, they're an analytic company. The whole point of this is that they're an analytic company, and they've looked at a lot of businesses. They said, you know what, we can actually do this in the movies. This was their plan from day one. So they built a audience of 3 million plus people who have MoviePass. They get them to go to these movies. They analyze their habits, so they know what films they like to see, the kind of films they like to see, the kind of actors they like to see. Then they start marketing. So now they've got a movie company, and let's say for this Escape Plan 1, I imagine Escape Plan 1 made probably not even $100 million. In fact, let me see. I'll tell you. See, and this is stuff, obviously, the MoviePass people know this cold, but Escape Plan box office. 137 million, better than I thought. Okay. So, Lockup 12, maybe that's the one I was thinking of, the smaller one. Escape Plan did well. Bullet to the Head, boy, they could have held that. But there's a point, actually. So here's Stallone in Bullet to the Head. It only makes $21 million. But MoviePass can send 3 million people to see Bullet to the Head by running a little promotional thing for the weekend. That's 3 million. Now, they've got 3 million people, which is a potential for 10 million people. If each person brings 1.5 people, they're into like 10 million people that they are controlling. And that is $100 million worth of tickets, of which MoviePass pays $30 million. They pay the money for their 1 million people. For their 3 million people, they pay $30 million. But what's the mechanics of that? If they pay $30 million and the box office is $100 million and their company gets back $80 million, then they turn $30 million into $80 million. Yes, they've laid out $30 million, but they've gotten back $80 million in box office revenues with a lot less advertising than a typical studio has to do. And a boost like that to any film is massive. You take a movie from $80 million to $100 million, you change the nature of the film. It makes it something more people are going to talk about and see. It gives it better legs. Once you cross these thresholds in the box office, and also the international distribution. That's, by the way, so MoviePass does this in America. These are U.S. box office numbers. MoviePass does this in America and gets $100 million out of a movie, a piece of crap movie. They turn into a $100 million movie. And then they make all the money because they're not movie passing the rest of the world. They make all the money on foreign distribution and on DVD sales and on Netflix sales and on all the cable company sales. They make all that back office money, which is where the real profits of movies are. So it's freaking brilliant if they can pull it off. It's in theory, it's brilliant. And they are freaking, I've heard the guy talk, they are positive this is going to work. They are really positive. Now they're positive with, it's easy to be positive with other people's money. Elon Musk is positive he's going to make, he's going to actually have a return on investment one day. These guys are positive this is going to work. But it's a different kind of thing because these guys are an analytic firm. And they have run numbers. Maybe it started out as a thinking thing in the office, but they ran numbers and they started looking at the movie business and they are like, holy crap, if we can do this and that, if we can get a few million people, their goal is 5 million people, but they're saying if we can get 5 million people to sign up to a service and we can then direct them to certain movies, we can turn any movie we want into a blockbuster. And that's worth billions. And when you look at what they're losing $200-300 million in a year right now. That's nothing. But the trick is getting from where they are now, which is running a losing money operation, just like Amazon did forever, just like Netflix did forever, just like Tesla is doing right now, losing $2 billion a year. $2 billion a year Tesla loses. They can 1/10 of what Tesla loses, MoviePass could run on. But now they're going to get the box office from all these movies. That's already a huge change. Nobody's acting like it's a big deal, and it is a very big deal. So I bought 5,000 more shares. Now 5,000 more shares is not very big. It's $2,000 because it's still. Where's the money going to come from, and how much are they going to dilute everybody when they're doing this, and where are they going to get the capital from? You know what, though? Next month, this is why I don't want to not be in it, because next month they could announce that the first film that this joint project is releasing is going to make them $100 million. Now they don't need any money from anybody, not even to borrow. And then the stock will go to the stock will go up 10 times in like a couple of days. So speculative. Keep in mind, very speculative, but I like it. It's a fun speculation. Now, also speculative is Northern Dynasty, NAK, which is who's asking about this? David, I think. No, Leafster's asking. So NAK, Northern Dynasty. What happened to NAK? They lost their partner. So they went down quite a bit. Northern Dynasty has the rights to a huge amount of potential gold and such, gold, copper, molybdenum, whatever how you pronounce that. They've got a huge reserves in Alaska, probably the biggest mine in the world. They have the right to mine it, but unfortunately, it's in a ecologically protected area, and they cannot get permits to dig it up. Nor is it necessarily economically viable to dig it up. Okay, there could be, there could be $100 billion worth of gold under the ground, but it's under rock that's so dense and so hard and so thick that it'll cost you $80 billion to dig it out. And it's not a $20 billion profit, because then you still got to do a whole bunch of stuff to get it to that level. And you've got to move and you have to process and move the whole $100 billion worth of gold to get to that last 20 billion that's theoretically profit. And by the time you do that and you don't flood the market with the gold and so on and so forth, you're talking 20 years down the road. So who in their right mind would spend $100 billion, $80 billion to mine $100 billion worth of gold to make 25% over 20 years? if all goes well. So, as attractive as it may seem, it could be a dead project. So Northern Dynasty had a partner, and then those are not the real numbers. I'm just making easy numbers. So Northern Dynasty had a partner, First Quantum, who had committed to paying $150 million to work with them and to basically test, assess, and bring the mine to viability, including getting all the permitting needed, through the environmental protection people, which I don't understand how anybody has environmental protection problems now when the head of the EPA is against the environment. So I'm not sure why they still have a problem with permitting. It's obviously it's on the state level. It's not a federal thing, but I would think that the federal guys would step in and save this. So that's the issue for NAK. So now First Quantum and Northern Dynasty broke up their deal. Now, did First Quantum, after spending $30 million on this, say, oh my God, this is never going to work. We're going to take our loss and get out of here? Or did Northern Dynasty, working with First Quantum, did First Quantum maybe not have the money they said they would have on time, and Northern Dynasty said, hey, you know what, we have other people waiting in the wings who have a bigger checkbook than you, so get out of here. Because obviously Northern Dynasty gets a commitment. You will spend this much money by this time, and this much by this time, and this much by this time, right? So clearly some money was spent, but then also the deal fell apart. So we don't know the story yet. But it could be two different stories. It could be one story, it could be First Quantum said the thing is not a viable project. They have not said that yet. There's been no quote from First Quantum of any kind saying anything like that. Northern Dynasty, on the other hand, may have exercised their right to kick First Quantum out because they weren't coming up with their end of the bargain. Or Northern Dynasty may have found a better partner. Northern Dynasty may have a partner who bought out First Quantum. We don't know anything yet. It's a very speculative play. If they ever start mining this thing, though, Northern Dynasty is going to be around where ABX is, which is like a $15 billion company. Or actually ABX, the way they're going, maybe they're not. Maybe they're $7 billion now. Let me see. ABX. If they ever actually $15 billion, I was right. Okay, so ABX is a $15 billion company. This thing is as big as all of ABX's reserves. So if they ever can mine it, they're going to go from, what is this? 139 million. So it's 100x, basically. If a lot of ifs. If they get a partner and the partner puts up the money and they figure out the mining and blah, 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 and whatever. So lots of ifs. But I could see it's possible enough that it's a fun bargain. It's a fun gamble. So again, something to put in the speculative portfolio. All right. Gonna have to wrap this up shortly. If Citadel, Dave says, if Citadel bought in HMNY at the 40 level, we should be relatively on the right track. Well, again, you got to look at what they're doing. I think 10%, whatever it is, $4 million to Citadel is about the same as me spending $2,000 this morning for my daughter. For me to buy 5,000 shares for $2,000 whatever dollars this morning is the same as Citadel saying, "Oh, let's give him $4 million. Let's give him $4 million and see what happens." It's not a big deal. It's a gamble. You have to realize that when you see people doing these things, it's a gamble. We gamble all the time. We do a lot of speculative plays with our portfolios. Sometimes you take a speculative play. If it works out, great. If it doesn't work out, oh well. Sometimes they don't work out. So I wouldn't say the Citadel makes it a definite thing. I wouldn't go overboard on this. I've got plenty of money. I'm sitting here with $6,000, $7,000 in losses. Yeah, about $7,000 in losses on two trades right now. So obviously, it's not a big deal for me to buy my kids a couple of $1,000s each worth of HMNY. But that's it. That's all. That's as much as I would not speculate on that. I'm a lot happy to speculate on ES going down from where it is now, and from the Russell and the going down from where it is now. I'm a lot happier speculating on that than I am buying too much of Harmony of HMNY, even though I love it. I think it's fun and it's exciting, and God bless. I hope it goes to I hope it does go up 100 times, and my kids end up with a couple $100,000 each. That'll be nice. You know, is it likely to happen? Not really. It's not that likely to happen, but I think that they've got a plan that's doable. Maybe they'll do it. Maybe somebody else will do it. But I think that I think it's a good concept, and I'm willing to put the money in. That's all I'm saying. So I'm willing to put the money in, willing to stick with it. We do have speculative positions in both of our portfolios, in the OOP and the LTP. And I just think of all the stupid penny stock bets, that's to qualify it, of all the stupid penny stock bets out there, I don't make a lot of penny stock bets. This is my favorite. So that's my ringing endorsement. My ringing endorsement of Helios is of all the stupid penny stocks out there, this one seems like a fun one. So we will see what happens, okay? Anyway, thanks everybody for coming, and we'll do it again next week, and hopefully I will not be down more than $10,000. All right, have a good day, everybody. Take care.